Hello everyone, welcome to the Ichimoku.co daily markets review for the trading day ending Tuesday, May 26th. Firstly to the S&P 500, and here we see very strong selling in the market today. Today's candle forming a lower high and a lower low, and therefore changing the trend to the downside, as opposed to the last 4 or 5 trading periods where we saw a series of inside days or outside days, which did raise a lot of indecision in the market and just suggested that there was a possibility of a change of trend back to the downside. The reluctance of the buyers to come into the market strongly, and the market finding support around the 21.25 level suggested that we had a sign of strength around that 21.25 level from the buyers coming into the market, not terribly effectively, but they were coming in, and it suggested that we saw the sellers losing commitment down around there, but we also saw the buyers losing commitment up around higher levels, especially up to the major high that was established at 21.34. For the days trading prior to today, we did see formation of a larger black body candle. That gave us a bit of a hint that there was a possibility of us seeing the sellers build some downside momentum, but a lot depended on that 21.25 level of support. And whereas we were seeing previous rejection from there, today we've seen the market take that area out in a very strong bearish manner. Importantly, however, the market has taken out some very significant areas of support today. The first being 21.19, the next being 21.14, and the area at the Tenkan-sen at 21.15, but with the market finding support down around the 2100 level and very close to the Kijun-sen indicator, it does suggest that we could see some buying coming in, and this has been something of an extreme candle, very large black body when compared to a lot of the recent body sizes, and there is a suggestion here that we could see the market relax to a degree. Now that doesn't mean that we won't see that downtrend recommence. There's a very good possibility of that happening, but a lot does depend on how the market reacts around this 2100 level of support. If we do see the market continue trending down, and if the market does breach down through 2093, we do have very solid support down around the Ichimoku cloud at the top of it, extending from 2085, and as we move further into the week, it does come up to meet that support around 2093. Now, if you recall, with the Fibonacci projection technique, we're examining the relationship of that previous first time frame uptrend that the market was in to the immediate previous, and here we saw the market testing to the high there around 21.35. We actually got to 21.34.72, and then we saw the indecision enter the market, and that did suggest that there was a possibility of this change of trend that we've seen occur today. Confirmation of it today with a lower high and a lower low. Now, placing the Fibonacci extension tool on this new downtrend, and here we've seen the market take out very important levels in a strong bearish manner, breaching the 38.2%, the 50%, the 61.8%, but finding support around the 100% level at 21.02, and that suggests that we could see some buying coming in around this area, although it's not supported by the candle. The candle is very bearish. We have solid downside momentum in the market. We have the sellers strongly in control and very strong commitment from the sellers on that candle, but it could be something of an extreme day. Now, just looking at the Fibonacci retracement of that previous first time frame uptrend, and here we've seen the market test through the 38.2%, through the 50%, but find some support just below the 61.8%. Failing to close below there, it suggests slight possibility of a change of trend back to the upside, possibility of buyers coming in here, but not a lot of confidence in that based on this being a very strong day for sellers. Moving next to the hourly chart for the S&P 500 futures, and for today's trading we saw the market open down below the Ichimoku cloud and the Kijun-sen indicator, testing down almost to the first pivot point support level, bouncing off there, and once again finding resistance around the middle pivot point level above the Kijun-sen and within the bottom of the Ichimoku cloud. Then around midway through the session we saw the sellers come into the market strongly, only for the buyers to come in and retrace back up to the middle pivot point level, and then for the remainder of the day the sellers committing very solidly to the downtrend, trading down below each of the Ichimoku indicators, and very importantly trading through that third pivot point support level. Now, it's very rare for a market to trade down through that level, and when we see the market test through that third pivot point support level, The following day tends to be a day where we see some profit taken, we see the market want to relax because it's a very extreme day, and we then do see that the sellers have lost some commitment. They've really put in their effort for the day previous, and that's this day here. So I doubt very much that we will see the market perhaps test to the first pivot point support level. We could, but I doubt very much that we could see the market test to that second level down at 2080. At the moment in this news session, we have opened down below the middle level, and there is a possibility of the market continuing lower, so we will be watching that first support level at 2093. But if we do see the market rally, potential resistance at the middle pivot point level around 2108, and then just above there we have the Kijun-sen trading around the 2110 area. Now, just looking quickly at the asset classes ETFs. And the first we're going to look at, and these are the ones that we can trade. The first we'll be looking at quickly is DBC. It's the Commodity Index ETF, and it has sold off in line with the equities market, the S&P 500, trading down below both the Kijun-sen and the Tenkan-sen, gapping down, but potential to find support around the top of the Ichimoku cloud. In terms of relative strength to the SPY ETF, underperforming, so one of the ETFs that we'd be actually allocating away from and allocating towards the equity sector, away from this commodity sector. Another weak ETF is the gold ETF, and we have seen the ETF testing down below the Ichimoku cloud, giving us a bearish market in that longer term time frame, as well as the medium and fast term time frames, gapping down quite solidly. In terms of relative strength, not strongly underperforming, so we might be allocating in line with the SPY ETF, but certainly the test down below the Ichimoku cloud suggests that we could see the gold ETF continue to trend down. There is potential support down at this previous swing low at 112, but a lot depends on how the market follows through following this breakout below the cloud. The next is VEU, which is the Vanguard FTSE All World Indices, so the equities market without the US. So we're looking at external to US, and here we see again with this market selling off, and it suggests that throughout the world today we've seen strong selling in the equities markets, breaking out down below the Kijun-sen and the Tenkan-sen in a bearish manner, suggesting a real possibility of the market continuing to trade down. Potential support down at the swing low around $50.35, and that's very close to the top of the Ichimoku cloud, so we could see some support coming in there. Looking at the relative strength, strongly underperforming the SPY ETF, which is the S&P 500 ETF, and suggesting that this is one we should be allocating away from as well, and perhaps towards the SPY. VNQ is the Vanguard REITs, the real estate sector, a real estate asset class, and here we see bearish activity down below each of the Ichimoku indicators, suggesting a strong bearish market. There is potential for follow through, some potential support at 78.88, then down to the swing low at 77.71. Not strong underperformance here, but still underperforming the SPY, but not in a strong manner. But as we can see from this ETF TLT, which is the 20 plus Treasury bond funds, 20-year plus Treasury bond funds, and we see bullishness coming into this market. So a strong allocation away from the equities market, strong allocation away from gold, strong allocation away from the real estate sector into the bond market, with a white body candle forming, breaching up above the Tenkan-sen indicator, so we're strongly bullish in the fast term time frame, still not bullish in the medium term time frame, and if the market does continue to appreciate in line with the buyers taking control and showing strong commitment for today's candle, we could find some resistance up around there, which trades at 124.50 at the moment. Previously strongly underperforming the equities market here, trading down below that lower band, but now up above the middle of the bands and suggesting some fairly weak outperformance, not strong though, but what we'll be looking for is a breakout up above the upper band, and we could start to look to allocate back to the bond sector here, but this is on a daily basis, certainly not seeing that on a weekly basis. And if we look here quickly at the weekly chart with TLT, and it is strongly trending down below the Kijun-sen and the Tenkan-sen, finding support at the top of the Ichimoku cloud and bouncing off there for the start of this week. Potential resistance at the Tenkan-sen indicator at 125.47, but if we look at the performance against the S&P 500 ETF, the SPY, and we're seeing strong underperformance.